Hello, welcome back to Family Investment live session today. I thought I would just turn up and share what I think about the stock market going forward for 2022. In fact, I was going to do a recorded version, but I thought it's easier to do a live, see any other questions that come up. But today it's going to be purely based on stocks, and I just want to focus on what I see coming forward. We don't have the magic crystal ball to see forward what we expect for 2022. But we have data. I have data today. I've been researching, I've been talking, I've been discussing on forums and speaking to the right people. And I thought I'll just present what I believe there'll be way going forward for my thesis, which I've written here. And I really want to share with you guys. So if you guys are watching this on record, I'll try to keep it short and sweet, under 20 minutes, and then Q&A about 5-10 minutes after. Try to keep it short and sweet because I know I've been getting feedback that it's quite difficult to watch a long hour session. So keep it like a show for 20 minutes to 10 minutes, but I'll show the key points of what I'll be speaking about today. Okay, so the first key point is it's really about the 2022 early stocks investing forecast. We don't know what will happen, but we've got data, like I said. But the first thing that I want to show is, for me, I'm bullish overall of the stock market. But I think there'll be a rocky start for the first half of 2022 because I've seen some issues, 3 key problems which I'll share, which will contain the first 10 minutes of the segment, which is important. But data will really showcase what I really feel. And then I want to showcase my forecast 22 in terms of performance. Like in 2020, I've done almost 100% returns. 2021, I got about 40% returns, which was a surprise. My target was 20. 40% returns, I beat the market again. I'm happy. But what will happen for 2022? What is my focus? What's my expectation? I've shared this in Discord, but I want to officially share this on YouTube here with everyone. And then stocks I would consider, really short, 4 key areas were considered weather the storm. No surprises, but I just want to be straight up transparent with you guys. My personal key action, if X or Y happens, what I would do. And finally, a bit of Q&A on stocks purely. I'll try to avoid crypto questions because crypto will turn into a whole crypto segment, but I want to focus on stock investment today. Okay, so appreciate if we can just keep the Q&A to stocks. Okay, I've got sweet in my mouth, that's why I'm trying to just slow it down quickly. So, excuse me. So let's begin. Let's begin what I think of my early stocks investing forecast. But before I get there, I just want to say hello to everyone who is coming here. I see Paresh. I think I've saw your response. So thank you for turning up. Chayak, thank you for turning up again. And Pauline, hello from you guys in Singapore. Try to keep it short and sweet to make sure that you guys don't get to bed too late. And BNB 365, not close retiring. I enjoy what I do. And there's a couple of minutes, a couple of weeks off. It's great for me, just to recuperate to get where I am. Okay, so appreciate you guys for turning up. So now I really want to go to the first part. Okay, I'm going to share my screen, but first I want to say again, I am bullish. When I say bullish, I'm not looking just year on year. I'm talking about the whole decade. I'm going to stick to my thesis of what I began my journey when I started YouTube. It's all about the disruptive technology, the AMD, the Square, the e-payment, the blockchain technology, the EV. I'm bullish for the whole year. Technologies are coming to evolution, everything. But not every year you're going to get 100% returns. I'm not going to say that, we've got a couple of 2x, 5x, 10x in 2020. We saw less in 2021, but we saw solid returns for great companies. But 2022 can be a bit rocky. Why? Why do I say that? Why I want to share this with you today? Because of 3 key problems, okay? 3 key problems. It's all happening in 2022, all sandwiched together, no surprises. But in previous years, which I've seen in investing for the last 12 years, these 3 key events happen in different years. And each individual of them caused a huge row of corrections of the market upset. But all 3 I hope it doesn't happen, but all 3 happening all at one time. Okay, so the first one that I want to go over is really the first problem is really the tapering tantrum. Okay, I've seen this. Remember the financial crash in 2007, 2009. Okay, so they had a crash. Feds will start printing money. They start trying to buy bonds, buy equity, see what companies they can save. Obviously, they never save a couple of companies. So things are going through. It's not just in the US, but also in the UK and Europe. But US, obviously, big market there. But in 2013, there was a tapering tantrum. Back then, I didn't understand what it was. I thought things were recovering after the crash, house prices were going up, and then boom, I saw a quick correction, and it was all over the news. It was called the tapering tantrum. So let me show you the chart here. This is what happened. So this is 2022. And you can see a double correction and triple correction. There's a bit of correction there. This is not really correction, but they're close to 10%. Yeah, that one was 10%, 10% within the same year of 2012 to go into 2030. But overall, the market went up. But this was enough to disrupt us retail investors, enough to shock people and scare people away. So if this happened, which we will be expecting to happen in Q1 of 2020, this is what we see. We see some shock in there. Because when the Fed stop printing money to stop buying bonds, stop buying equity, this will happen. People will start pulling their money out because all the money that we've made in the stock market is really from the Fed's injection of cash. Or not the silent cash, it's really money being put in for us to farm out the money. So this is where we are. And if we get a tapering, and this might, overall market is going up, but we would see this flash crash. So it's not nice when you're holding your stock at the top, wish you would sell, and it comes down. So I thought I'd just share this with you to prepare you guys. If the tapering occurs, 2012, this happened. Why did this happen? It's because it's all dynamic here. Tapering, quantitative easing is one of those that you have to pull back eventually. But you need an equilibrium because it's all about unemployment data that you get in and also the growth of companies. So you're trying to get stabilization. So during when it happened in 2013, there was lack of, because the data that came in for the unemployment data was showing that people are still not getting jobs. But there it was a delay of 3 months. And when the data came out 3 months later, things recovered. But it took 3 months before the data recovered. So I just want to pre-warn everyone that if this quantitative happens immediately, cut off straight up, you will see some form of correction. We've seen it already, and it will start going into a deeper, potential even correction if the market really throws a tantrum. So this chart here is a maximum drawdown, which I've got from somebody on British Investor. He shared this with me this morning because he's sharing the same thoughts with me, but he had more data. So this is where we are showing the shades of indicated period of quantitative easing, which is in green. But this is when this is the drawdown, meaning the correction to as deep as 30%. So back in that 2012 era, which I said, it drew down to at least 20%. One quantitative easing stopped. So this is the quantitative easing period. And when they all stop, when all the music stops, boom, we see about a 20% correction. And then it happened again in 2014, but not as bad, around about 10% when the quantitative easing stopped, around about the end of 2014, 2015. So the drawdown was as low as 15, 20, 10%. But this is where I was. This is where I was, the chart which I'm showing here, that I've seen that 20% correction. It was scary. So I thought I'll pre-warn that this could happen if the market throws their toys out of the pram. Okay. So the second problem, which I think could be a problem that happened, it could happen together with quantitative easing tapering, is really the interest rates hike. Okay, the interest rate hikes is wrong. We know we're all at low interest rates. In UK, we've got it up by 15 basis point. Now we're around about like 25%. So in the US, I've seen it before where I was investing in this period, low interest rate, and suddenly in 2015, 2016, interest rates started hiking up. Because end of the day, the banks need to make money, the Federal Reserve needs to bring in more interest. Okay, and this is where we've seen. I was there in the market then. This was when I was investing. I was huge investing 2015, 2016 during this period. And guess what? There was a boom, a double correction between round about September, November, December, and then happened again in January, February, March. I remember it was Chinese New Year. I was back home, back with my parents, and I did not want to turn on the TV because it was so sickening to see the stock market just dump and puke, and 3 months later, it gone back up again. So interest rate hikes could see, it was just 2-step up, and this is the damage. 2-step up here, as you can see, that period there, and that step up puked the market down to as bad as a 10 to 20% correction. That was painful. So imagine that combined with the tapering of the quantitative easing. How could this double tornado impact us? So that's scary. So I thought I'll share this, and it seems that it's all happening in the Q1 of 2022. Okay, and the third one is really about the inflation transition. So are we really going into a transition of inflation, meaning inflation transition, meaning inflation temporarily? We're just there that, the price of milk, the price of travel, the price of oil, that's just going up for a temporary period. And once things ease off, it drops off. But for some reason, people during the lockdown have been making more money off stocks, like me, you, making more money off crypto, people are working from home, people are making money, and people are willing to pay for high prices because of this printed money. So will this cause a problem? Yeah, potentially, yes. So I look at Financial Times, and this is a really good chart here. Data Explorer consumer price inflation back during the financial crash when inflation was high, coincided with the crash. And then UK, there was a Brexit, and everything went up in value and pushes the stock market down. And guess where we are? We are even higher in terms of inflation compared to the financial and the Brexit period. And it doesn't seem to be stopping. So if this goes on and on, we will see a bit of a dampening factor on the stock market, people taking profit, trying to repay taxes, trying to repay mortgages, high rising rates in businesses. So this could happen in combination of the other two factors. So something that we need to see. Data is key. Data is important. So that is the three key data. That is the quantitative easing data where we saw a dump of 15-20% when it eased. And then that is the data where we see interest rate hikes and we saw the dump, the puked. And that's inflation data where we are just now, could be an indicator that we might go into a deep correction. But again, it's all data trying to forecast, trying to crystal ball it out. And last but not least, a data which is shown by British Investor on Twitter today. He's got more data than me, which I really appreciate just before coming to the show, is the S&P 500 mean regression detrended. So basically, it's on standard deviation. And it looks like we are higher or as high as the internet bubble just now. We are basically deviating from the trend line by 78%. Just imagine you've got your 250-day moving average, but they're based on the trend line, and we are deviating quite high towards where we are. So what happens the last few times when we pass the double standard deviation? We go into a correction, we drop. So that, I don't know how accurate this is, but it could be a concern. I've seen lots of charts that always cause concern in correction, but this is one of those where we have gone a long way from the financial crisis. We've gone a long way from the COVID crash, but are we in the bubble? Are we not? So it's something that we need to just to portray. But for me, I think I'm going to take this as a pinch of salt. I'm going to take it a step at a time because I think there's still a lot of silent cash. So this is where I'm showing that the three key issues that could really rock our investment thesis for the first half. Again, I'm bullish overall, but I just want to warn that these three tornadoes or these three disasters, the inflation, the tapering, and also the interest rate hikes, if they all come in combo in the first half, we could see a bit of a rocky period. So I just want to pre-warn everyone because historically we've seen it happen, but I don't want to let it happen and then tell everybody, oh, see, I told you so. So I just want to pre-warn, so you guys need to risk assess where you are. I'm not saying that take all your money out, but then again, you need to look at your performance, your benchmark. That is where I want to fall into next, yeah? Okay, so my forecast, what is my expectation forecast? So let me just change my share screen here. I want to share a different screen. Okay, oh, wait, where is my... give me a second. I really want to share screen. Okay. Okay, I hope you guys can see my... let me just zoom in. So what is my... Alex, what is your forecast? What is my forecast going into 2022? Like I said, back in 2020, I made about almost 100% return. Happy, cannot complain. 2021, I made about 40% return. Overall, I beat the market again. The market was around about 25%. And what is my forecast? What is my expectation? So my expectation for 2022, I'm not going to call any high highs. I'm not going to call a 10x or 5x. I'm not even going to start shelling any 5, 10x stocks because there's no more. The great days were over. The great days were behind us. Okay, I've already locked in what I wanted. But my forecast going forward, I think the S&P 500, because of this ups and downs, they will still outperform. My target is, again, I repeat, my target is between 12 to 15%. Okay, VIX going down below, tempering up, back down. 12 to 15% is what I expect from the S&P 500 because of rotation into energy, rotation into banks, interest rate hikes. But personally, my focus, I hope to beat the market. I hope to gain about 18 to 20%. That's my target, 18, 20. If I drop to 15, I'll settle for 15. So I'm not expecting high highs like 2021 or 2020. I'm expecting more of a stabilized up and down cancellation, super cancellation, 12 to 15% S&P 500. My personal target will be 18 to 20%. Okay, so I'm not saying that they're going to be extreme, super IPOs coming up, but I think we need to just accept that we're settling down. The market will be settling down. We've gone really high defense. Accept that the market will be settling down. Okay, so honestly, to my next segment, it's what stocks would I consider if, Alex, you're telling me that we're going to go through this period of the first half going down and then going back up again. What will be the stocks that you consider try to weather away from this? So I'm not going to be selling my tech stocks to buy into this. If I got spare cash, I'll consider this 4 key areas which I'll invest in. Okay, the first one is really, I said this many times, will be Goldman Sachs. Interest rate hikes will favor the banks. I've told a friend to buy HSBC about 2 months ago, and he's happy because it's up by 30%. But I look at Goldman Sachs, because of inflation data, because of interest rate hikes, all jumbling, too much noise, I still think it's a good entry point to buy some banking. If I got spare cash, I'll buy. If I got no spare cash, I'm not going to sacrifice my tech stocks. That's where I am. But if folks like you guys are looking for more exposure, more defensive, then there's something that you should consider, because interest rates will push in favor of this key Goldman Sachs. Again, don't be a stock picker. Second one, don't be a stock picker. I'm not going to start shelling out stocks that will beat the market, growth stocks, 60, 80% growth. No. Sometimes, it's quite tiring to stock pick. So sometimes we just have to settle down to the index again. The index have done well, 25%. I think the S&P with the rotation, with oil will be outperforming, energy, travel stocks will be outperforming, retail will be outperforming, banking will be outperforming. You see rotation, S&P 500 will do well. 10, 15% is a great yield. So buying index next year is nothing wrong with that. Sometimes you don't have to go too greedy. S&P 500 will be where I want to go. But if you want to be more adventurous, the third one I'll be going is the FTSE 250, because Brexit is sort of behind us just now. And I think FTSE 250 has got great qualities of oil, banks, growth stocks in there that's ready to run. Okay, we've seen all this big mega cap running, but we will see them all the smaller cap stocks kicking off. So FTSE 250 is my preference over the smaller caps in the US, because I do see good returns. So FTSE 250, my third one. And last but not least, if I had just one stock to pick for 2022, there's only one stock. I'm not going to be a magician. I'm just going to be pure, straight up front of you guys. It's all going to be just Berkshire Hathaway. Remember, Warren Buffett and his team hasn't really deployed much cash. They still have Apple has the biggest holding. They still got Bank of America. They still got their Walmarts. But they still got $150 billion war chest in, and they've not executed it yet. Remember, Warren Buffett doubles his wealth every time there's a crash. He doubles it up. But with this crash, I've not seen him bought anything. I don't know what he's waiting for. I'm sure they've got a plan in place. They're waiting for interest rate. They're waiting for data. They're waiting for unemployment data. They're waiting for the treasury yield. They're looking at every aspect. And with their experience and expertise, I think I should see them doing well. They've done 30% year to date. They beat the S&P 500. So if you do not want to get S&P 500, you just want to choose one stock. If I had money just to choose one stock, Berkshire Hathaway will be the one I'll be choosing to buy as an addition to what I have on my portfolio already. So that's the stocks that I would choose and consider for weathering. I just want to play it safe. I didn't want to play fire. I'm not looking for the next 5, 10x. I'm looking for an area where I could drop significant amount of cash in, and then Berkshire Hathaway will be the only one to pick if I had to pick out of the lot. Okay, but again, I've chose 4. Goldman Sachs, I like. S&P 500, I think we'll do 10 to 15%. The FTSE 250, I'll expect about 10 to 15 to 16% as well. Berkshire might outperform everybody else. That's where I'm coming from. That is the one ring to rule them all. For me, things might change, but this is the data I'm sitting on just now. Okay, last one I wanted to speak about is really what's my personal actions. Okay, what's my personal action? So I'm going to show you this screen again. I've got a personal action here, which I'll share. Okay, so it's really 3-step prong. This could happen, this could not happen, but this is my anticipation as of now, just after Christmas, before New Year. So what's my personal action here? Okay, the first one, I should have put a slide up. So listen to me. The first one, I've written all here. I'm going to share this. So as it stands, S&P 500 is at 500. I'm happy with my AMD. I'm happy with my Tesla. I'm happy what I have. Okay, I took some Tesla profit. I took some. I've rotated some to Nvidia. I've sold some Coinbase. So I'm stuck with AMD, Tesla, Nvidia. I'm happy there. I've got my CrowdStrike. I've got my Darktrace. I'm not going to sell anything. But if we see S&P 500 go into a deep center rally, we're past Christmas, center rally. If S&P 500 hits the 5,000 point mark, okay, some are claiming that S&P 500 might have room to run. Yeah, if S&P hits 5,000 points, if they go really high, which push my AMD, push my Nvidia, I may consider taking some profit. Okay, I'll consider taking profit and store. I've got no cash just now. I'm all in. Okay, I'm all in for this rally. No cash, but if it hits 5,000, I'll be taking some profit. There's nothing wrong taking profit. I'll take some profit. If it hits 5,000, I'll take profit. I would sell some Nvidia. If Nvidia goes beyond 320, 310, I'll sell some Nvidia. Take some profit. Keep cash aside. Setting what 10%. If it goes even higher, I'll set at least 20%. Nothing wrong with cash sitting aside. So 10-20% cash if it goes hit 5,000. If it doesn't hit 5,000, it goes sideways, then great news, because stocks are rotating, things are rotating. I think we're trying to ease through this change. But folks are really pumping the market high. It causes a concern. If it pumps the market too high, folks will end up taking profit. And I do not want to be the last out. So if it hits 5,000, I'll be taking some profit. Okay, that includes my kids' Tesla holdings, which I've not touched since 2020 as well. So I'll do consider take some profit of just not myself, but my wife, my kids, if it hits 5,000 mark, because 5,000 is a really high, all-time high achievement. So that's what I think, if it goes to that mode. But things might change next week after the new year, but we have to watch and see, because remember the 3 key concern areas, and if it keeps going up, things are not right. Okay, so hits 5,000, you take profit. Alex, what do you do? Crypto. Somebody might be asking, are you going to crypto, Alex? Are you going to crypto? Are you being cheeky? You're not telling us. So if it hits 5,000, scenario 1, and crypto, Bitcoin drops to 32,000, then I will rotate. But if Bitcoin doesn't drop with the stocks to 32,000, I'm not going to do anything. I'll just hold my cash. I'll hold my 10, 15, 20% until I find a proper entry for the stocks. I will just wait, hold cash 10, 20% until I see a correction of Nvidia coming back down to 10%, 20% correction, or AMD or Tesla. I'll rebuy back in. There's nothing on that. But if crypto drops deeper than my tech stocks, I'll go into crypto. Only if it goes below my 35,000 Bitcoin mark. That will be my trigger. But if not, I'll hold cash until I rebuy back in. But Alex, what if the stocks keep going up after 5,000? Then I have to wait, either buy momentum or I have to wait correction. I will see what data brings in for the interest rates, tapering, inflation data. Okay, so this is where my plan is. So at the moment, I'm not doing anything until I see a 5,000 mark. If it goes sideways like this, fine. I like a sideways market. We all like a sideways market because it's stability sometimes. Okay, so the 3 action I said, 5,000, I'll take some profit, 10, 20%. If crypto drops even deeper to 35,000 Bitcoin, I'll rotate over to crypto. If not, I'll stay until I see a nice correction on the market for AMD, Tesla, Goldman Sachs, or Berkshire. And then I'll buy back in after 10, 15%. So that's my plan in my head. That's I've written down here. I'm going to put a note and I'm going to put some alarm triggers on S&P 500. So I'm going to watch it where it goes. But if things are rotating smoothly, stocks, tech stocks going down, going to Goldman, going down into oil, but S&P are hovering in a nice zone between 440 to 4800, then fine. I'm happy with the sideways market until everything eases itself out. Remember, for the 3 key agenda. So this is really my 3 personal action. I hope that the last 23 minutes are useful, and I'm happy to take any Q&A. But really, I just want to recap the 3 key issues today. Is really the tapering tantrum. Okay, the tapering tantrum that I see that might kick in if once a quantitative easing stop. And secondly, is interest rate hikes always upsets the stock market every single time. There's no one interest rate hikes will not upset the stock. I've seen it many times, unless it's proven wrong that historically this time it's not going to happen. But the last few times I've seen interest rate hikes, the market goes bananas. And it's the time where I wish I had more cash. And then finally, inflation transition. Is it a real transition? Which I question it, because people can't afford things. People don't mind paying for high fuel. People are not complaining paying for expensive new Teslas. People are not complaining buying new houses because they're making money off other avenues. When is this inflation going to stop? We don't know. I do hope it stops, because it's getting a bit too expensive. I can see my budget being punched in the chest. Okay, so now I really want to go into, I'll just take this off, Q&A. I'm just going to go in Q&A and see what questions I can take. I can't answer everything, but I'll try my best to go from the timeline, see how I can do to answer, and in the next 5-10 minutes or so. Okay, so apologies if I cannot catch anyone's question, but feel free to catch me on Discord, or any other of the members can help and catch up. Yeah. Okay. So I'm going to go. Okay, I'm going to choose one. Okay, Real, recognize Real. How are you doing? Nice to see you. Oh, I like the name Triple R. Will the Omicron variant affect the stock market in Q1 2022? For me, the Omicron is showing sign of a spike hospitalization. So at the moment, it sounds like a risk on, meaning that it could affect the stock market. But with the surge just now, the fatality, the rates are decreasing. So hopefully by Q1, it gives a bit of confidence because the boosters, Israel, they're giving the fourth boosters. The UK, they're pushing the third boosters to a lot of people at every ages. So I think it'll be short-term burst that it looks like it's going to impact the stock market, but long-term, because it's not really causing a disruption, hopefully the flights and airplanes open up again. And when that happens, I think that will be the end of Omicron. It'll be behind us, unless somebody brings out new data that the fertility rate for Omicron is going up. So for now, short-term, yes. But for long-term, I think Omicron will slowly ease itself out because, like I said in the presentation, it'll be the three key areas where folks are really focusing on the interest rates, the quantitative easing, and the inflation data. So short term, yes. Long term, I think it would just go away. Okay. I'm going to scroll through. I'm going to try to pick up. I did see an AMD. Ming Ji. Okay, holding Nvidia. So hi Ming Ji, how are you doing? Thank you for coming for a live session. So holding Nvidia at 303. Do I just cut loss or just do nothing? New to this. Okay. So for me, if you're in for the long term, hold Nvidia. You buying at 303 is your reference point. Okay. I hope that you've still got cash aside. It's a reference point. When I start buying any stocks when I'm new, I buy. I don't know when to buy. I buy some. Okay, I buy some. That's my reference point. So if Nvidia, if you want to go long term, fine. Then when it starts dropping, then you dollar cost average as you go in. Because end of the day, you're not here to buy just 10 stocks or 5 stocks. You're there to buy a lot of a particular stocks that you believe in. Because 10 stocks of Nvidia will not change your life, but 1,000 or 100 Nvidia stocks will change your life. So focus on the volume. So take this as a reference point. But if you think you've gone in too deep and you really need the cash, then I think there'll be a period of S&P going up, and then hopefully you even yourself out if you want to leave the market. But again, we cannot time it. For me, I'll leave it in there just now and dollar cross as we go down. How far are we going to go down? I think we're talking about worst case, a 10 to 20% correction in this place if it does happen what I expect to happen. So take it as for me, take it as a reference point, and hopefully that helps. Okay, thank you very much. Next, I'm going to go down. Okay, BNB 365. I think he's got something to share. I'm just scrolling through. Yeah, scrolling through. So BNB 365. Hi Alex, I've been investing in FTSE 350. I made lots of money. I was thinking of reducing my exposure. I've been going bullish. FTSE 350, FTSE 250. The smaller caps will play great coming into that recovery year, especially FTSE 360. The small cap companies, there are lots of travel companies in there. I think they'll do well in the long run. Smaller caps. So I like that as well. I think it's a good hold. I think it's a time good hold. I think Brexit and everything's all behind us. I think it's a good hold. I see a good UK recovery, especially with GBP going into interest rate hike first, pushing the strengthening their GBP value so they can buy cheaper stuff abroad, so they can sort of beat inflation. So reducing exposure, I would hold it. In fact, I'm looking to get into FTSE 250, so I don't see why you should be reducing, because the overall FTSE, we've got lots of energy, financial. I think that's the area where during rotation, during inflation data, during interest rate, those will benefit them because we have less tech stocks compared to the Nasdaq. So I think it's a good one to hang on to. Okay, so I've seen I've just randomly clicked one. I think it's real recognized again. Okay, this is randomly clicked. I'm not trying to. So because I think I saw Fiverr. Okay, hi Alex. I averaged down on Fiverr. What's your thoughts on growth tech stocks in 2022? So for me, Fiverr, I think I've said this before, Fiverr has grown itself too much in 2020, 2021. So Fiverr is still going on its high growth rate, is still managing well in its revenue. And now with opening trade, it will go down a bit. But so Fiverr zone between $80 to $140, I think is a good buy zone. That's what it should be valued at, because that's the valuation. 160 is the valuation of what Fiverr should be for the next 6 to 8 months. So anything above 180, I think Fiverr is a bit too expensive. But anything below 140 towards below, I think is good averaging dollar cost, averaging buy trigger point. So long term, it just have to be long term. Wait for Fiverr to. I still see Fiverr as the $15 billion company, $20 billion company. Folks have pumped it up way too high back in 2020. It's starting to come down, but it's still at a growth rate. So Fiverr is still there to command the freelance economy. So it's something that if you're young investors out there, in your 20s, your 30s, your early 40s, you want to grow stocks, I think Fiverr is a great growth stock. For me, I transition over semiconductor, but if I got spare cash, I would buy Fiverr on the dip again. Yeah. Okay. I am going to. I think I've seen one. Darren Ng. How about Palantir? Okay, so I have spoken to a couple of guys on Discord, on the Patreon, on about Palantir. So Palantir, let me just check. Okay, let me just make sure that I don't speak gibberish. Let me see where Palantir is, because the last time I spoke about it, it was about 3 weeks ago. PLTR. Okay, it's 18 or is it? So Palantir is at 18. Okay, I've said this before. Palantir has got a really, really strong base, strong fan base. When I say fan base, are people who hold. Okay, between 18, 17, I think is a really strong hold point. So you're at the point where the hold is really, you're at that last final hold. People are buying for the long term. So you're at that point. To me, if I were to be buying Palantir, that would be a good time entry point. But with everything going on, I'll wait till January to see what happens with the market. But that's a good buy entry point, because end of the day, Palantir will be winning contracts, and all the contracts are long term. And Palantir, at this point, because in the next 3 to 4 years, when you look back at Palantir will not be at $18. Palantir will not be at $9. Palantir will be way ahead, above the $40 region. So take advantage of Palantir as your consolidation time. Okay, I've been in stocks like AMD, Nvidia, where they have been consolidating for 9 months. Amazon has been consolidating for more than 12 months. These are the period you need to take advantage. Keep buying every single month. That keep dollar cost averaging. It's a great company. It's a great stock to own for long-term growth. The only issues with me personally, my own personal Palantir, it's not a business to consumer like Apple or Nvidia. It's a business to business. So they rely on contracts, but these contracts are long-term. You don't expect their quarterly earnings to be growing like a straight line chart. You're going to see their company grow as their clientele numbers grow. So it's completely different. That's the only issue, but it's a great business to business company. Okay, so I call this the consolidation zone. Great support region. I don't see them dropping below, but hey, things can happen. But I still do see a rebound when things are coming back up. Hopefully the Q3 of 2022. Okay, hopefully that helps, Darren. Okay, I am going to scroll up. I'm going to see what else I should. Again, somebody asking about Fiverr. Let me just go on Fiverr. Okay, let me make sure, because the last time I checked Fiverr, it was okay. Let me just look at Fiverr. Okay, just do everyone a favor. Let me go to Yahoo Finance and bring the chart up. FVRR. Okay. Let me just do a look deeper into Fiverr where we are. Sorry, that thing screen might be slow. Just to make sure that everybody's. Oops. I think so. That is a. Oops, sorry. I just want to quickly go on Fiverr, because I think about 3 folks have been asking. I noticed. So Fiverr zone, that between 300 all the way to 200 is way too high. Okay, that people are just overpaying. I blame bloggers. I blame everybody who's been pumping the stock. I blame fools.com selling to his newsletter holders, subscription holders, on buying the stocks, and you see the huge dump coming in. So, but again, like I said, any zone between the 140, 150 zone and below, this zone below is a good dollar cost average zone, because that's what the company is worth. The company should be worth that $15 billion revenue, $15 billion market cap company. So this is the region we are, but you need to hold it long term for 2022, 2023. To wait for them, for their growth expectation, for them to realize that they're actually more than a $180 company. So that's where we are. This is going through that period. Would you buy? I think there should be. We are not seeing a proper floor established just now. So we just have to be patient and see when this floor. So sometimes you have to let the floor establish itself. So for me, I would consider buying. I would just wait, see whether it hits the $100 zone just now, because it's still being on a sell-off. You see the volume starting to slow down. You can see the spike volume here in red, volume here starting to slow down. We're waiting for momentum to come back in. So don't be a bag holder. Don't catch the falling knife. Just wait for that volume to come back in and buy back on momentum. That's what I would do. I'll just hang back and wait for the momentum to come back in. Anything positive on the back end of it. Okay. So be patient, guys. Really, really be patient with the likes of Fiverr. Okay, no problem. Thank you very much. I see a very interesting question from Bausab. Thank you very much. I'm 25. Let me just turn it off first. I'm 25, about to start investing for financial freedom. Great, congratulations. What do you recommend for a full 100% crypto? 100%. I was going to avoid crypto question, but since you asked me, I've clicked on it. I need to answer. So, full 100% crypto portfolio. So I always, if anybody comes up to me on the road, say, Alex, what do you buy for crypto? Always buy Ethereum. Ethereum will be a good bond because Ethereum is quite stable. You need to buy Ethereum. End of the day, one single Ethereum in the near future, in the next 5, 6, 7 years, will buy you a single Tesla. Okay, one Bitcoin will buy you a house. One Ethereum will buy you a Tesla. So hold some Ethereum at now when it's at 3,700. So Ethereum is one. Buy some Luna. Luna is a great hold because of stablecoin USD and it's still growing. I still see it $250 in the close region. And number 3, high speculative one. You can either own Phantom or AVAX. Okay, Phantom AVAX something to buy. To hold because they'll be the next Luna, they'll be the next Ethereum, they'll be catching up. Application base are huge. And the last 2, I'll choose 2 different tokens. You can buy ICE or SPEL, or you can ICE or SPEL, which is part of an ecosystem with the Frog Nation. ICE, SPEL, or I would choose LQDR or Convex. So those are the 4 that you could choose and play around. But then that involves a lot of farming. So that's something that you need to consider. So I'll repeat the last 4 tokens is ICE or SPEL, Convex, CVX, which is for briberies for stablecoin farming, and last one, what was that? LQDR, which is on the Phantom network. But only go into this 4 ecosystem if you are involved in MetaMask, if you want to get involved in farming, you want to get involved in utilization of this coin. If not, just stick with the easy AVAX, Phantom, stick with the easy Luna, stick with easy Ethereum. So that is what I'll tell if somebody comes on my street for a 5-minute chat. Okay, thank you very much. I hope that's useful. I hope that's useful. I'm just going to see what other question I can catch. Any crypto? Oh, that's what. Add adventures around the world. Any thoughts on Carnival Cruise? Seems an unbelievable comeback stock opportunity. Yes, travel stocks will be a big comeback. For me, I want to be safe. I'll go Airbnb. But like Las Vegas type stocks, you know, those what is it? Sands. The gambling stocks, I'll be a bit wary. But you know, Carnival, I personally prefer the airline stocks, okay, because I don't go cruises. You know, cruises is great. Cruise stocks was great before the pandemic because cruise stocks is one of those stocks that people will pay a year in advance to book a ticket and then slowly down payment and deposit through. So cruise companies could see how much they could earn a year ahead in advance. But for me, going in, if I want to choose a travel stocks, I'll go Airbnb. I'll choose airline companies. I'll choose KLM, Air France, or Singapore Airlines, or American Airlines. These are the areas I would focus in because this will generate revenue back again. So I'll prefer airlines over a Carnival Cruise, but I'll prefer Airbnb, airlines, Carnival, and then I'll go into gambling like Las Vegas, Sands, holiday type stocks. Okay, that's my order of where I would buy first. Okay, hope it helps. And what else? What else? I think I see another Lenny. How you doing, Lenny? Welcome back again, Lenny. Another crypto questions. People sleeping on Phantom. Yeah, people. Phantom is getting the marketing, is getting the tweets, is coming out, is being trended. I think that's the word for it. It's getting trended. People buy. But things with Phantom that are like, I hope to do a video soon, maybe tomorrow, live session about Phantom purely. I'm bullish. Okay, Phantom is not just Phantom. It's not just buying Phantom as a whole. Phantom's got TOM, which is a peg system which people are going on to. So Phantom spins up TOM. TOM is great. And it spins up LQDR, which is liquid driver, which is great as well. And also the Spirit tokens, the Boo tokens, the DEX are on the rise. So a lot is happening at Phantom. Phantom already, I believe they're already 100x, 50x or 100x. And I think there's still a good room for a 10x to run. But again, if it runs at 10x too quick, you would dump. So be careful with Lex Winner. But again, it's a great layer 1 stock. It's a great layer 1 transition from Ethereum. Okay, I'll just catch a couple more questions before I go. And agree, Lenny, Phantom's good tokenomics. Agree with that. I'm huge on Phantom. And Daipish is talking about Dark Trace. Thank you very much, Daipish. I'm just going to bring the chart on Dark Trace quickly. Okay, second last question. I'll pick the last question after this. I've not seen Dark Trace, but I think they might be on the recovery from I last saw. Okay, so I spoke about Dark Trace before. I'll speak about it again. And Dark Trace, as you can see, this 3 bump up previously is institutional. 3 white soldiers. White soldiers are related to institution pumping. Institution pump, pump, pump. Institution dump, dump, dump. Okay, that's a 3 large volume. Institution dumped again after the pill hunt. A second institution dumped a week later. And this what you see here. These are retail selling of a bit of institution here, but these are retail selling of people getting worried, people new into it. They bought the highs, they're selling off just now. But we see a settling period just now. We see a settling period, a bit of a rejection here, but I think this settling period will go over a period of time. The likes of CrowdStrike, the likes of Net, they're all still establishing itself. So they're going to go into the second quarter, maybe not really much momentum, but when the earnings come out, when they're showing back to growth, we got data to back up what they should be valued at, and hopefully the momentum takes on. We just have to be patient. I've not sold a single my dark trace. My kids are still holding dark trace. If I want to take profit, dark trace is not an area to take profit because I'll be taking loss. I'll take profits everywhere else, but dark trace I'll be holding because it's really generally cheap. So if you bought, well done. I'll be buying in January, February. Hopefully it stays at this zone where I have cash to buy. If I have cash, if not, I will just miss the period for now. But it's completely oversold and it's coming back up. But don't expect it to spike up, because what we need in the UK is spikes like this. We need white soldiers. Yeah. When I say white soldiers, it's basically candles that show institutional huge buy. The whales buy. That's what we need. We need institution come say, oh, we need some growth. But because the institution in the UK and Europe, they're looking at banks, they're looking at oil just now. So this is not the flavor of the month. We just have to wait time for it to develop into something. But again, business as usual. Okay, I hope to catch one last question. I'm so sorry. I hope to catch one last question. I like to sing. Let me see your question. Let me try to understand it. Do you think the government will continue to print money, stimulus? How do you manage your cash reserve these days? A good question. So, Omicron, first, in the US, they're talking about tapering, yeah? They don't care about Omicron no more. They're talking about tapering. They're not talking about support. So they're really trying to ignore the whole tapering. They want to go tapering, quantitative easing, none. They want to raise interest rates. So the US are not interested in print more money. In the UK, there was element of money that's being printed out for entertainments because concerts, footballs are all closing down. Dance studios are all closing down. So there's still some support for small businesses about. So UK, they're still printing some money to support those businesses. But overall, folks want to raise interest rates. They want to get money back into the system. So money printing will eventually stop. Hopefully they stop for 2022. I think it's a lot healthier if they stop the printing money because inflation is really killing us these days. So I think the government will eventually stop, hopefully Q2 of 2022 or maybe Q3, completely stop and start going to healthy order where we have to raise interest rates. But that's where we are. So there's nothing we can do. We just have to go with the flow of the market. Okay. So that's why I say getting index is great. But how do you manage your cash reserve these days? For me, at the moment, I'm all in on my stocks. I've got almost, I would say, 0.5% cash. And also in crypto, I'm almost all in. I'm going to farming, so I'm basically all in both. So that's why I'm waiting for S&P 500. If it hits 5,000, then I will take some profit. I'll take 10, 15, 20%. If it doesn't, if it goes sideways, fine. I'm just going to let it sit there. For my crypto, I'm just going to let it farm itself out. But if it does go in the dump, then I have to take some cash out. But at the moment, I'm saving as hard as I can, but I'm not putting the savings that I'm saving just now into both areas. This saving is growing in the background. This savings is going. So I'm growing my savings in the background, but I'm not taking money out unless they go really drastically high for no bizarre reason. I'll take money out. But at the moment, I'm saving, but I'm not putting in until I see a deep correction. Because me taking savings and buying now is really no point, because all the buys I've bought is back in the days when during the dip, during the April, March, June, July dip. So it's no point buying at high point just now. So I'll buy when it goes in correction. If it doesn't, fine, I don't buy. I'll just keep my cash reserve growing. I'm saving as much as fast as I can. Okay, hopefully that helps, guys. I really, really hope that helps. I hope this 45-minute session helped. I wish I could answer everybody's question, but I just want to keep it nice, sweet, and easy. And I hope it helps everybody in General Agenda. 2022, I like to repeat that my forecast will be about 18 to 20% target to beat the market. The market, I'm expecting about 12 to 15%. That's how I see it just now, because I'm expecting the first Q1, Q2 a bit of sideways, or maybe a bit of correction drip, that maybe not even close to correction, depending on the agenda, and then back up, and then we'll see the market relieving it again. VIX going really low, and then hopefully technology takes over and then push it away. Inflation slowly dies away. People get back to work. That's what I expect. That's what I hope. But I know that booster shots are coming out left, right, and center. So this is me. Thank you very much, and I hope you enjoy this, and I hope to see you soon. And the next live session, I was hoping will be speaking about a bit more crypto. I got so much crypto agenda I want to speak about. But if not, always join me on Discord because that's where I'm most active. Or if not, always join me on my Twitter because I'm there every single day, at least 3 to 4 hours a day on Twitter. That's how crazy in it last Christmas. Twitter, Alex Co is handled at Alex Co. Join me there. I've got a lot to share. But hopefully I'll come more videos in you because I'm ready. I'm rested, ready to go. Thank you. Have a good day. And thanks for coming, guys. Appreciate that. Really, really appreciate it. Thank you. And remember to like so that people can see my videos. Thank you and take care. See you soon.